If high dividend yields catch your attention, you'll want to stick around for this one. At Insightful Value, we hunt for underrated opportunities where risk meets reward. And today, we're diving into Carlyle Secured Lending, a stock that's dipped recently but still throws off a powerful income stream. This review is for informational and educational purposes only. It's not financial advice. Carlyle Secured Lending, ticker CGBD, is a business development company, or BDC, that primarily invests in the debt of middle-market U.S. companies. Backed by the globally renowned Carlyle Group, this isn't just a typical yield play. CGBD focuses on senior secured loans, which means they sit higher up the capital stack and have a greater claim on a company's assets in case of trouble. That's a key risk mitigation feature in today's uncertain economic environment. So what's going on with the stock? It's been sliding alongside other income-focused plays as interest rate volatility and recession fears dominate the macro narrative. But here's the twist. Carlyle Secured Lending actually benefits from higher interest rates because many of its loans are floating rate. So while the market is broadly punishing BDCs, CGBD is quietly raking in stronger interest income. In their most recent earnings, net investment income beat expectations, and the dividend remains well covered. From a value perspective, this dip could be overdone. Carlyle Secured Lending is trading below its net asset value. In other words, you're buying the portfolio at a discount. The dividend yield is currently sitting around 9 to 10%, depending on entry price, which is exceptionally attractive given the solid fundamentals. Plus, the management team has been actively repurchasing shares, signaling they see the same disconnect between price and value. Their loan portfolio is also well diversified across industries like healthcare, tech, and business services, and they maintain a relatively conservative leverage profile compared to peers. While no BDC is risk-free, credit losses can happen. Carlyle's brand and underwriting discipline add a layer of trust that many smaller BDCs can't match. Now let's zoom out. At Insightful Value, we look for these types of misunderstood situations. Our mission is to decode complex company stories and help investors, new and experienced, understand what really drives value. We break down the data, highlight the signals, and skip the fluff. Whether it's a high-yield sleeper like Carlyle Secured Lending or a beaten-down growth name, we aim to deliver insight that helps you make smarter moves. There's a lot more where this came from. For deep dives and fresh value picks, visit insightfulvalue.com. And if you like content that respects your time and your brain, hit subscribe, like the video, and drop your thoughts in the comments.